Hey, welcome back. Today it's Monday, July 6, 2026, and the market came back from a holiday weekend with a pretty strong rebound. But this was not just a simple everything went up day. The headline indices were strong, especially the Nasdaq and S&P, but underneath the surface, this was still a very selective tape. Chips bounced after last week's brutal unwind. Big tech helped carry the market. Crypto was strong, gold was strong, but defensives like healthcare, staples, utilities, and real estate were weak. So the big question today is, was this the start of a healthy rebound after last week's semi-sell-off, or just a bounce in the same crowded AI trade that still needs to prove itself? So let's jump through the indices sectors, the big stock stories, the trade check-ins, the weather report, and what we need to watch for the rest of the week. Quick disclaimer, this is not financial advice. This is for educational purposes only. This is how I'm reading the market, managing my own portfolio, and thinking through trade architecture. Please hit subscribe to follow for more, and thank you to everyone who subscribed recently. I really appreciate it. First off, let's start with the macro news from today so we know the backdrop. The big economic report today was ISM Services. ISM Services came in at 54 for June, down slightly from 54.5 in May. So services are still expanding, but the pace cooled a little bit. The important part is underneath the headline. New orders cooled. Business activity cooled, but employment moved back into expansion for the first time in several months. And prices paid fell from May, which means some of the services inflation pressures eased. So the macro read was actually pretty market friendly. The economy is still expanding, the labor market is not collapsing, and inflation pressure inside services is easing a little. That is the soft landing combination the market wants. We also still have the backdrop from last week's weaker jobs report that lowered some of the fear that the Fed would need to get more hawkish immediately. And oil is still relatively contained after OPEC approved another production increase, and shipping through the Strait of Hormuz continued to normalize. So the market had a decent macro backdrop today. Services still expanding, inflation pressure easing, oil contained, and a little less fear around immediate Fed tightening. All right, so let's look at the individual indices and see how that relatively decent macro backdrop affected them all. So it was largely an up day. SPY was up 0.87%. QQQ outperformed at 1.43%. The Dow was also up at all-time highs. The DIA, the diamonds, finishing at 530, up 0.42%. IWM was up 0.44% as well. But TLT was flat to slightly down, although we were down quite a bit more earlier in the day, and we're going to get into that during the trades. So the clean read was this for me. The Nasdaq led, the S&P was strong, the Dow closed above 53,000, small caps participated but didn't lead, and bonds basically went nowhere. So that tells me equities like the data, but the bond market didn't give us a huge confirmation yet. TLT did not explode higher, so this is not a clean rates are collapsing and everything is risk on trade quite yet. It's more like growth bound, semi-stabilized. The market liked the services data, but investors are still waiting for the Fed minutes and earnings before making the next big macro call. All right, now let's look at the individual sectors and see how that played out. So communication services were up 1.58%. Technology was up 1.58% as well. Financials were up 1.3%. Consumer cyclicals were up 1.14%. Industrials up 0.71%. Basic materials were basically flat to slightly down. Energy was down 0.22%. Real estate was down 0.73%. Utilities were down 0.73%. Consumer defensives were down almost 1%, and healthcare was down almost 1%. So the sector message was relatively clear that technology-led financials were strong, industrials were strong, consumer discretionary was still green, communication services were still green. So all those together is a really nice sign for some of the recovery stories, but healthcare, utilities, staples, and real estate were all down about 1%. And so this is not defensive leadership, but this is risk-on leadership, really. And the nuance is important because it's not a broad everything up rally. It was more of a tech and cyclical rebound from what we saw last week, while defensives got sold off a little bit. And that means the market was willing to take risks today, but it was not necessarily buying the whole market equally. And a lot of the reason for that move was the rebound in chips that we were just talking about and the AI-related tech after last week's heavy selling. And SMH, in fact, let's pull that up over in the individual sectors here. Bounced about 2.1%, or 2% actually was where we closed. And that helped repair some of the damage from last week. That was really the main laggard there. But semis trade still needs a lot more work for me. If we look at it actually on the daily, I don't still like the pattern that we have going over here. We had some topping patterns. And in fact, if we actually look at it on the weekly, it's even more damaging. This is not something I personally am willing to trade up there. However, we had a recovery today, and it's either a bounce after a sharp sell-off, but that's not the same thing as full structural repair. So we need to see how that plays off. But the risk reward up here, or reward to risk, is not quite compelling for me personally. And we'll get into that during the trades of the day. The first big story today was Broadcom. Broadcom rallied after extending its chip supply partnership with Apple through 2031. It was up 3.73% today. And that helped stabilize sentiment around semiconductors in general because it showed that at least some parts of the chip supply chain still have long-term contracted demand. Apple was also up today, a little bit less, but 1.3%, and that helped the broader mega cap tape. This mattered because after last week's semi-unwind, the market needed a real reason to step back into chips, and the Broadcom-Apple deal gave investors that reason. The second big story was the chip rebound, and we talked about this briefly when we were talking about the sectors. If we look at SMH, it had an up day here today, 2%. But if we look at it on the weekly, it's not quite as compelling. So semis bounced after getting hit hard last week. SMH and stocks were both green, and Broadcom helped lead that move, as we just talked about. But I'd still be careful here because one bounce does not erase the weekly damage that we're seeing. We need to see whether this is real stabilization or just a reflex rally after a crowded trade got flushed. The next big test for the chip trade are Samsung's preliminary earnings, SK Hynix US listing process, and whether investors keep rotating back into AI hardware or continue shifting towards hyperscalers and software. The third story was Solstice buying Element Solutions in a $14.5 billion deal. This is not just a random industrial deal, it's tied directly into the AI infrastructure theme. The combined company would have more exposure to semiconductor materials, electronics, chemicals, thermal management, data center cooling, and even nuclear-related power demand. So this is another example of the AI trade moving beyond just GPUs and chips. The market's also starting to care about the materials, cooling, power, and infrastructure behind the AI build-out. And Solstice itself sold off on the deal, which tells us investors may be worried about integration leverage or whether they are overpaying. But strategically, this is a real AI infrastructure supplies chain story. The next big story is Microsoft. Microsoft announces cutting about 4,800 jobs, including a major restructuring in the Xbox business. We may have seen some of this news previously, but it's getting larger recirculation right now. And from a human perspective, layoffs are obviously painful. But from a market perspective, investors often read this as cost discipline, especially when the company is spending so aggressively on AI, cloud, and data centers. But the stock still finished down on the day, which tells me the market didn't fully reward the announcement. And like I said, I think there's already been discussions about this. So maybe that's part of it. But investors may like cost discipline, but they're still wrestling with the bigger issue, how much Microsoft has to spend on AI and how quickly that turns into earnings growth. But aside from the news, of course, we're going to get into the technicals here. And I think there's another reason that it's slightly down on the day. But that's going in our positive sentiment box here. The next big story is O'Reilly Automotive, and I realize it's not a name a lot of people trade, but I really like stuff like this when there's a very clear news reaction as opposed to a drop and a recovery or volatility within the price, but we saw a very clear move here, so I just wanted to report on this one. O'Reilly fell after reports that it's considering a cash bid for Genuine Parts Napa Auto Parts business, and this matters because it's a real stock-specific reaction, like I was saying, not just macro noise, and the market seemed concerned about deal complexity, integration risk, possible regulatory issues, store overlap, and whether O'Reilly would be taking on difficult assets at a big price. So again, this is just one of those cleaner examples of a stock moving because of news, specifically investors not loving the potential deal structure. The next big story is SpaceX. We covered it over the weekend, but essentially SpaceX is set to join the Nasdaq 100 before they open tomorrow. And that matters because index inclusions can create passive buying from funds that track the Nasdaq 100. It can also create volatility because the stock has already had huge volume and aggressive swings since the IPO. So SpaceX itself was down today, even though a lot of growth and tech names were green. So this is one to watch tomorrow because the index inclusion flow may be powerful, or it could already be priced in, of course, but the chart is already volatile. The next story is oil, inflation, and OPEC. So OPEC approved another production increase for August, and oil stayed relatively contained as shipping through the Strait of Hormuz continues to normalize. And that matters for the inflation story. If oil stays contained, that helps the Fed and helps the soft landing narrative. If oil starts to spike again, especially because of geopolitical risk, that would bring inflation fears right back. So even though oil was not the biggest market mover today, it's still part of the macro weather report. However, I will point out here, because I'm not going to cover it in the trades, that there is bullish RSI divergence starting to form right here. So I would expect some type of bounce, maybe just a temporary little bounce there, but I'm not expecting oil to come crashing down in a spectacular fashion. However, I'm also not trading it, but putting it into part of my macro calculus for the rest of the market. And the final stories are about earnings for this week. We have Levi's, PepsiCo, and Delta coming up later this week. And those are important because they give us different reads on the economy. Levi's gives us discretionary apparel and consumer demand read. Pepsi gives us consumer staples, pricing power, and snack demand read. Delta gives us travel, services demand, and premium consumer read. So the real earnings season ramps up after this, but this week starts to give us some of the first clues. All right, now let's jump into the weather report, essentially using SPY as a proxy for the market. And we're going to look at the monthly, the weekly, the daily, and the 1 hour real quick here. And so the big technical thing today is that SPY pushed higher and closed near 751. That's constructive. I mentioned a number of times that there was a lot of activity on the dark pools at 750 and on the GEX at 750 as well. So we needed to get above it. And I didn't think it would actually be possible, but it's a lot easier when you gap above it. But that being said, I want to mention one caveat, and that is that today was still coming right after the holiday weekend and volume was a lot a little bit lighter than a full normal institutional trading day. And while sometimes that's good to gap up on very little volume and reclaim it, we didn't gap above the 750. We had to do it in regular trading hours. So while the price action was good, I still don't want to overread a single Monday after July 4th. It might still be a bit of a vacation day for institutional traders. And that means we want to see whether this move gets follow through tomorrow or Wednesday. So that's the real key here, is when you break a level like that, you want to see that follow through. And for me personally, I want to see a break above it, come back and retest, and then continue higher. And I'll know that that level is holding for me as a tradable bottom, so to speak. And so now let's look at what's going on the weekly chart. And essentially, the weekly chart has a really nice uptrend. The broader trend still looks intact. It has been chopping for a bit in this range, but it remains above the key moving averages. It's hard to see because I have a lot of intraday price levels here, but this is the 20 simple moving, this is the 50 simple moving, and this is the 200. So it remains very well above it, and buyers are still defending the higher time frame structure. On the daily chart here, we have a even more choppy trend as you expect, because this is broken down even further. With this trading range here on the daily, doesn't necessarily look constructive to me. We are in a super downtrend. It's not as strong of a downtrend, but it does show to me that we're not in an uptrend, of course. And what I'd really like to see, again, even here, is the same thing I just mentioned. On the weekly, I want to see a break above 750. I'd really love to see a break above this super trend downtrend. So it's 760 and then come back down and retest it. And so I'm not really willing to play SPY directly here. In fact, I'm not even adding to my long-term holdings via DCA, but I am using this as a proxy for saying, how is the market looking? If this is the case and SPY is strong here, am I likely to play other names? And so on days where I think we might have big red days on SPY, I'm going to be more selective on my longs on individual names, or at least put that into the calculus based on which sectors are trading directly in correlation with the SPY. The other thing I want to just point out is on the hourly here. Let's bring it down to the 1 hour and see what we can ascertain from here. So one thing I really like is that we were above the pivot point and we crossed above R1 and we finished the day above R2, which is really great because it does say that we have some momentum to the upside there. Again, lighter volume though is less constructive for me, and I would just take this all in and use it as a data point for trading individual names. Second part of the weather forecast is, of course, the macro and geopolitical setup for the rest of the week. And macro this week is lighter than last week, but it still matters. Tomorrow, Tuesday, we get the U.S. trade balance. And of course, I'm on the West Coast, so my time is 3 hours earlier than if you're on the East Coast. And that's usually not the biggest single market mover, but it matters for GDP tracking, the dollar, and the global demand picture. Wednesday, let me scroll down here, again, 3 hours difference, is the big macro day because we get the Fed minutes from the FOMC meeting. And that's probably the most important event this week. The market wants to know how divided the Fed is, how concerned they are about services inflation, and how much they are still thinking about rate hikes after last week's softer jobs report. That's a real important one for me personally, the way that I model. And we also get wholesale inventories and consumer credit on Wednesday. Let me keep scrolling down. On Thursday, we get initial jobless claims and existing home sales. Claims matter because after last week's weaker payroll report, every labor market data point matters even more. Existing home sales matter because housing is one of the most rate-sensitive parts of the economy. If housing weakens, that tells us higher rates are still biting. If housing stabilizes, that softens the landing argument. As you may know, I'm quite invested in IYR via IYRI, so I'm watching that very closely. And Friday has no major economic report scheduled, so the forecast is pretty simple. If the Fed minutes are not too hawkish, service inflation keeps easing, and TLT stays stable, then the market can keep trying to rotate higher. If the Fed minutes sound more hawkish, yields rise, or semis roll back over, then today's bounce could fade quickly. And the weather report for tomorrow is constructive, but still selective. I want to see whether SPY holds 750, whether QQQ can follow through, whether SMH can stabilize for more than one day, and whether TLT stays calm into the Fed minutes. Now let's check in on the trades we've been covering on the channel. And if you haven't done so yet, now would be an awesome time. I'd really appreciate it if you could subscribe. And of course, turn on notifications so you can get notified every time I drop a new video. So the first trade we're going to talk about is Netflix. All right, so a lot of people have been talking about Netflix. So today we're going to go through the fundamentals first before we do the technicals. Just one quick line so you understand the backdrop for them. So Netflix has been one of the cleaner fundamental profiles on the list. The latest quarter revenue grew about 16% year over year, and the diluted EPS grew about 86%. So this is a real revenue and earnings expansion story. And for me, the issue is not business quality. It's essentially trade location. So I've mentioned it in a number of videos that I hold 100 shares that I got assigned via CSP in one of my long-term holding accounts. So I'm not adding to that at the moment, even though I do think that this is going to recover nicely. But I have, in the meantime, been selling cash secured puts below the market to collect some premium. And I'll be funneling that back into some long shares as we start to go into a daily uptrend. Because the first thing to notice here is on the daily. And we don't have to do every time frame like we did over the weekend's video, but just notice that on the monthly here that we had a breakout retest. So we're coming back into this level perfectly. And also, if you look at it on the weekly, we're hitting the 200 SMA and are finding some support right there. We're also seeing RSI bullish divergence on the weekly here. So that's very powerful. You could see from here to here, this is now a lower low, but RSI is making a higher low or a lower high, if you will. So we have bullish RSI divergence there, and you can also see it on the daily. So in fact, let me go down to the smaller time frame here on the daily, because you can also see my pivot points are there. And I can see this RSI divergence playing out nicely from here to here. We now have lower lows. I guess actually here would be a better point to do it right here. From there to there, the body of that candle, body of that counter, or the wick to the wick there. And I also have a reversal on one of my custom indicators right here, and we reclaim this support. So I like that. I do think we could come back down tomorrow. In fact, if you look at the pivot points, we could come back down here to 72. So I'm not aggressively adding right here. I just want to point out Netflix as a perspective trade that I'm watching and not financial advice, just how I'm looking at the market. Next, let's talk about IBIT and ETHA for Bitcoin and Ethereum. And of course, they're different than the fundamentals I was talking about before because they're not operating companies, so there's no corporate revenue or EPS expansion to analyze. This is a macro liquidity and technical structure trade. And of course, there's a lot going on geopolitically, monetary policy, legislation, that kind of thing that's going to influence it. But since we can't know all of that, we can look at the technical patterns to see what we can ascertain from traders who have more information than we do, essentially institutions. And the first thing that we can see if we look at Bitcoin on the weekly here, and we mentioned this previously, and I'm using IBIT because it's the most liquid, is we saw RSI bullish divergence occurring from here to here. The price got lower, RSI got higher there, and I love that once you have it on oversold technicals. And we did see a bounce happen right at that point. And if we look at it on the daily, we could see something much the same here, where we're getting a lower price from here to here. These were the lows, RSI is recovering. So that was a point at which we went long. You could see it in some of our videos from over the weekend. And last Thursday, we also talked about it. But so I don't want to cover it too much more. I'd actually just like to see a reclaim of 37 to get out of this daily downtrend on the super trend, because we need to recover that first. And as you guys know, I like to mention, there tends to be a lot of oscillating between daily downtrends and uptrends before we start to recapture the weekly. And you really need to start to reclaim some stuff on the weekly before this is actually a true place to start investing for me personally. However, swing trade wise here, I love it. Dollar cost averaging, I do like it because I also have a bullish outlook for the rest of the year on Bitcoin. But as far as the charts are looking at, if you're doing smaller swing trades, you may want to wait for some type of pullback to the 200 SMA of some kind before getting in. This trend line was broken on the 4 hour, so I do love that. But I'd want to see us come back down maybe to the 34 or 35. I love this liquidity sweep right here. So it is looking relatively healthy, but I can see our first point of resistance coming up on the 4 hour and the 200 SMA, which is around $37. And on the daily, our first point of resistance is probably going to be confirmed at that same point around $37. Yeah, so that's Bitcoin there. Ethereum, I am also in this name. We're getting close to the first part of resistance here. So I really want to see a true reclaim of that. I'm looking for this to reclaim 15 before I come in strong on it, but it is looking good on the hourly and on the weekly, the hourly and the daily. But the weekly, of course, is much weaker there. But Ethereum has a really nice equal lows here, essentially, with stronger RSI that's been forming over the last few weeks. So in general, I like both of these trades. Again, not financial advice, just how I'm looking at the markets. All right, now to everybody's favorite trade, Microsoft. And so if you've been watching this channel, you should probably know about their fundamentals a bit, but Microsoft's fundamentals are still expanding. Latest quarter revenue increased 18% year over year, operating income increased 20%, and diluted EPS increased 23%. So the business is clearly not as broken as the charts would lead you to believe. The sentiment debate is AI capex versus AI monetization. Investors want to know whether all this AI infrastructure spending turns into durable earnings growth. The layoff story gives the market a cost discipline angle, but the stock still needs to prove relative strength. So now let's look at the chart. And if you watch my breakdown, I did a multi-time frame breakdown of it yesterday. So if you watch yesterday's video, I'll link to that. You can see what we should have been expecting. But essentially, the charts are actually looking a lot better than they appear here, where I'm starting to see some type of absorptions, consolidations, and actually some positioning from larger institutions based on whale alerts, trade flashes, and time and sales data, especially on the dark pools. So let's go ahead and look at the daily to see what we can get. Actually, before we do that, I just want to point out that the weekly has not yet claimed the weekly 200 SMA, and I want to see that 200 simple moving average reclaimed. I'd love to see it happen this week. Otherwise, this is a place where I am still just taking my profits as they come, selling some cash secure puts below it. And then on the next move, I'm going to wait for a significant level to be retested before going long. But I am very allocated at the moment. As you may know, this account in particular has 160 shares. I have a bunch of calls that used to be call spreads, and I've closed some of the short legs. So now I can ride out the long leg to play this thesis out. But let's go to the daily and see what we can see on it, because something very interesting happened today, and I'll show you it on the GEX there. But one thing that I do like is that on the daily, this is the 20 simple moving average. We held above it. We came back down below. We tested this fib, the 78.6 fib, which was drawn, I think, from this previous low right here. Yeah, that's 78.6. We came back and we retested that and bounced right off it. It was wonderful. I actually had some day trades on that that we were watching. And then we closed back above that support, which was wonderful. And we reclaimed the 20 simple moving average on the daily. And this may be the first time we have reclosed above that since the beginning of the month, actually since the start of this downtrend. So that's a really great data point there. I hadn't quite noticed that till this, which is one of the reasons I love doing these videos for you guys. The other thing to look at is their GEX. So I had to download it. Let me pull it over here. So it's this one, because Microsoft has expirations that expired today on 7/06. So I had to download it during the course of the day. And I kind of knew where price might close because we had this huge cluster right here at 385. And if we look at where price closed, it closed right around 386. 0.74. So it wasn't too surprising to see it close around there. However, what I did notice was the GEX for the rest of the month. We started building up at this 400 strike pretty well over the course of the day. And I could see the 510 start to grow for the cumulative, and this goes through 2028. So this is actually very long term. It's all strikes for all expirations. But I did start to see more interest coming in there. And I could see us coming up towards 400 and start to get muted because I've mentioned this before. When you hit call walls, the market maker starts selling shares and you start getting a bit of a muted reaction as you approach those zones. And you can see actually that we did come into, this is a cluster for a dealer cluster, and we did start to have that dampening effect as we got into it. So I wouldn't expect a massive move there unless we get some more news, which is kind of what I'm on the lookout for. So that's all we're watching on Microsoft at the moment. Next, let's look at everybody's second favorite stock on this channel, which is Meta. And so Meta has very strong revenue and EPS expansion. The latest quarter revenue grew 33% year over year, net income grew 61%, and diluted EPS grew 62%. The big sentiment shift is that the market is no longer only viewing AI compute as a cost center. After the cloud excess compute story, investors are considering whether Meta can actually monetize the infrastructure. So fundamentally and narratively, Meta is one of the strongest names on the board, in my opinion. So let's jump into the chart here and see what happened today. So the first thing to notice is that on Thursday, we had this big red day and everybody was a bit worried about it. I mentioned that we had only done a 50% retracement. And the retracement I'm talking about is from the swing low to the high when that news hit about the compute being resold. And a lot of times I like to not mark it from the news candle itself, but from the swing low before it, because what these tend to indicate to me is that somebody who had more information than I do knew that this was a good place to start building a position. And you can also see that we have this like brick wall effect going on right there anyway at that 540 mark. And so we like that in general as a place to mark the fib. But when you do it, you could see something really interesting in there. One, you could see that when we had that red day, it's because it lost the 23.6 and came down to the 50. So that is almost like a measured move there. And then today we came down and we tested that 50 again, and then got bought back up to the 38.2% on the fib retracement. And what I really like about that is what it says is that we're essentially in the upper third of this move. Price is starting to find some acceptance around that level. And so I really like that. Plus, you could see that we had a different fib retracement right here for this 100. So we were expecting this to be some type of resistance. And when you see multiple confluences with different fibs drawn on different time periods, it starts to show you where some of the most significant levels are. I really like that for mapping out my levels. And what else I really like is when they start to correspond with my pivot points. So if I go ahead on equities and turn off the extended hours and hit apply there and click OK, we could start to see, and then I'm going to bring it down into the 1 hour. We could start to see a lot of behavior here from those pivot points. And so if you're looking on the intraday time frame, what happened is once we reclaimed this pivot point, we came up and just kept bonking our head against the upper this is R1 right here. And that R1 is also kind of corresponding with that 100% retracement on a different time frame. So I really liked that level. And another thing to notice is that when we look at the GEX, and now this has changed because this first expiration was actually, it was originally going to be for today, because this is one of those names that has expiration throughout the week. And so it's a little funky in after hours because I just reloaded it, but we saw a huge call wall at 600. And so personally, we started taking some profits when we hit that 600 call wall. And what we're looking for on the chart itself is for a recapture of this 610 right around here, 608, 610, because I want to get out of the 1 hourly trend there on the super trend, because you need that in general to continue moving higher. And then on the 4 hour, and this will probably correspond with breaking out above that, what we're noticing is this trend line right here. And this is auto-generated for me, so I never have to worry about the way that I'm drawing it. And I mentioned it when we broke out on Wednesday here. We broke above that trend line, and I really liked that because it means we didn't have to push through that resistance during regular trading hours. But I want to see us reclaim that because we pretty much popped above it, came back and retested it, overshot it a bit, not abnormal in any way. And now I need to see us come back up and reclaim that. And particularly this area up here where we have the 4 hour 200 simple moving average that's acted as resistance. I want to see us reclaim that. And then up here, this dashed line that you may be seeing, this is the 200 simple moving average on the daily. I have it showing even when our chart is not on the daily. So I would love to see a reclaim of that. And if you look at the GEX one more time, it's hard to see because of this, but you start to see some cascading interest going on there. And there were some big calls starting to form today at 650. So I don't think it would be odd to see by the end of the month that we come back up to 650. In fact, I'm trading on that. That's what my hope is, of course. But not financial advice. Manage your risk when you're playing those levels and make sure you have trade architecture that supports it. For example, I'm not just holding open shares saying, I hope I hit the 650. I have a few call spreads that are aiming for the 650 with the appropriate amount of leverage. And of course, I run a website called alphaharmonic.io where you can plan out the trades just like quant traders do to hit those levels, to log, what your time horizon is for individual trades, what you're shorting as a hedge against those trades and all that. So sorry for the shameless plug. Let's now go into the next trade. All right, so the next trade is one we haven't covered too much, but I started covering it this weekend as a special bonus for everybody, which is SAP. And so SAP I've been building a large position in, except I did start to take some profits today as we hit a resistance point. But let's cover their fundamentals in case you're not too familiar with it. And they have very strong cloud fundamentals, essentially. Even though the stock still needs to prove itself, the latest quarter total revenue grew 6% or 12% at constant currency, while cloud revenue grew 19% or 27% at constant currency. And cloud ERP suite revenue, which is essentially their main product, grew even faster. And non-IFRS EPS was up about 20%. So the cloud transition is working for them. The problem is that the stock has been lagging. So I want to see whether the chart can finally confirm the fundamentals. And I mentioned this over the weekend, that they just need to maintain these fundamentals. They don't actually need to improve them for them to be undervalued by most metrics based on their price to fundamentals. So let's look at the chart and see what's happening. And I did a really deep dive multi-time frame on them over the weekend, so I won't go too far into it today, especially because this video is getting longer, but I'm going to show you one of the main takeaways, which was this essentially tiered RSI bullish divergence, where you have bullish divergence From here to here, you could see that the RSI is going up, the price is going down. The price continues to go down here, RSI continues to go up. And then from here to here, you start to have some, what you would call a hidden divergence. Price is actually confirming with the RSI that we're going down. But if you look at it on a larger time frame, from here to here, the trend is still intact that you are now having higher RSI and much lower price. And that's happening on the 52-week low here. So I love that. At the same time, we have a crossover on the MACD shortly thereafter, and we've now reclaimed this resistance. So to me, what this starts to look like right down here is a spring. If you actually subscribe to Wyckoff analysis, this is your accumulation zone. This is a false breakout. We come back down into the accumulation zone. We have basically a shakeout, a liquidity grab down here. And then all of these people who got into that trade short have now been shaken out, or all the people that were getting long here have been shaken out if they close down here. So this is a really compelling place to be in. I'm still in SAP. I did close some for profits as we came back above this, what I assumed would be a spring. So that's all I wanted to cover on SAP, except maybe we could look at the GEX real quickly. This is compelling here. We could see that we're starting to see, and these load a little funny after hours. For me, with my proprietary GEX program, you could actually just go onto, there's a lot of different websites you could subscribe to, but you can also get a lot of this information for free. This isn't going to be a tutorial on that. My point is that after hours, my GEX data for the nearest expiration is sometimes a little funky, and I don't want to reload it right now while we're talking, but I'm starting to see at 167 and 170, a whole lot of GEX coming in today, positive GEX, a lot of positive positioning happening up there. So I do expect that we're going to see some resistance when we get there. And you can see at 167, and this is just so amazing how this always happens. That is the upper band of the super trend for the downtrend, that 168, 167, depending on how wide of a line you draw with. And then you can also see that right here, 166 is the upper resistance level based on the pivot points for tomorrow. So I'd expect some resistance. However, we gap up above that. If we start getting some positive news for SAP, it'll be a really great time for that to happen, particularly if you're positioned. However, we do have earnings coming up in about a month at this point, so it's something to watch closely. All right, I'm going to give everybody a special bonus one today, which is SentinelOne. It's more speculative, but I've been trading it a lot over the last few years. A lot of cash secured puts below the market, a few long-term shares, that kind of thing. And SentinelOne is more speculative, but the fundamentals are improving, even though price was declining during that time, and they've started to recover lately. So I just wanted to touch on it. And last quarter, the revenue grew 21% year over year. ARR grew 23%. Non-GAAP operating margin turned positive. GAAP earnings are still negative, but the losses are narrowing. So this is not a clean GAAP EPS expansion story yet, which are the names I really do like to play when I see RSI divergence and we see EPS expansion. Those are the names I really love. But for me, that means it can stay on the watch list, but it needs tighter risk control than the mega cap names because it's still a higher volatility cybersecurity trade. But I am obviously bullish on cybersecurity, as you could tell from some of my other plays over the last few months. So I'm watching it, and I'm watching it specifically for large dips to sell cash secure puts below. However, today we got up, and this is on the daily, we got close to breaking out of this range, this little cup and handle, if you will. Here's your cup, here's your handle forming. So I do like this trade. And if you actually look at it on the weekly, we touched the weekly 200 SMA today and got rejected off of it. So that shouldn't be unexpected there, but I'm starting to see a bit of recovery here. So I like this story. I'm watching it closely, and I'll continue to report on it if and only if you guys comment that you want me to actually do this name, because I realize it may be a bit of an outlier for a lot of people. So I'm going to cover another one I don't always cover. It's called Xylem, and it's a water play. It's water technology, essentially. And if you're not familiar with it, it was just a really great setup, and I hold it in my long-term portfolio, and I want to talk about why I've decided to start going much longer. I have a lot of calls on it. So Xylem is a steadier in quality industrial, essentially. I know it's tech, but it's industrial tech, essentially. And the fundamentals are moving in the right direction. Latest quarter revenue grew about 3% year over year. Reported EPS grew 14%, and adjusted EPS grew 9%. So revenue is expanding, EPS is expanding, margins are improving. And this is not the same kind of high beta trade as software or AI if it was a pure play software, but I do think water is going to come alive at some point. So I like this name. And for a long setup, I like a business that's compounding instead of deteriorating. So if I look at it on the chart, the other thing that becomes compelling to me is this really long-term RSI bullish divergence occurring over, basically 6 months here. So we have this oversold signal right here. Price continues to fall and RSI is going up. And even if you measure it from here to here, which we could probably see much better on the weekly or monthly, you have a really long-term RSI divergence. So you're essentially getting this at a really nice price based on that metric alone. And like I said, if you do it against the fundamentals, it's great. But what I also really like, because I've been in it since around here, is that we broke above this daily trend line right here finally. And you may also see that we're starting to get what looks like a crossover. In fact, I believe it finally happened today, where you have the 20 simple moving average on the daily crossing above the 50 simple moving average on the daily. So that's a great sign. A lot of times when this happens, I will see a pullback to the trend line or maybe even to the moving average itself before continuing. And if it was to pull back to this moving average, we'd still be in a daily super uptrend. So that would be great. But also we'd be filling this gap. And so I wouldn't mind seeing some repair there before continuing upward. So that's Xylem. I'm watching that one closely. And also I do like that the ATR is kind of in the sweet zone of 2.84. So about $3 a day. That's enough for having two long calls to actually matter as far as getting some bang for your buck if you have appropriate leverage using calls. Essentially, if it's only moving 10 cents a day, it's not really going to be worth it for you in a lot of cases. Again, not financial advice, just how I'm trading the markets. Now let's get into some of the bigger cloud names we've been talking about for a very long time. The first one is Now. Now had a really great day, but it did pull back into this daily trend line. So it's an interesting thing because if you watched it on the hourly, we had this huge pump. We pulled above R1, came up to R2, got smashed back down and closed right around R2. So it was a good day in general. And the great thing that I like seeing about this is that the RSI on the 1 hourly is not diverging at this point. It's just a little bit of a pullback. So I do like that. Of course, I am allocated very heavily to Now. So I'm going long on it quite a bit. Shares, leveraged ETFs, calls, selling some CSPs, cash secured puts, well below the market. So it's a name I'm watching closely. Plus, I love this inverse head and shoulders that is starting to form. But what else I really liked is that we held above the 618 on the fibs here. And so I could see this really starting to come alive soon. And the GEX on it was really lively today. I started seeing larger strikes occur, but I also did see the 110 be a call wall. So it was no surprise that we hit 110 and started to sell off. But all around, that looks healthy to me. It's a name I'm staying in for a little bit. I love that we reclaimed the 4 hour a few days ago and are staying above it. We actually reclaimed the 50 on the 4 hour there, which is nice. So just bullish all around there for me. Again, like I've said, don't just watch somebody on YouTube and then trade because they said something was bullish. Wait for your own entrances, do your own diligence. This isn't financial advice. But to the downside, I actually could see us falling all the way back down to 100. And I don't think it would be that weird for it to sweep the liquidity here, come down to that. And you can see based on the daily pivot points here, it's much wider now because we had this range today that closed right in the middle. So the pivot point is right here. But if we were to come all the way down to S2, which isn't crazy, S2 happens quite a bit, that'd be a great place for me to add some more longs. So I'm looking at that personally. All right, so let's look at CRM. So if you guys don't know, but I don't know how you wouldn't on this channel, the fundamentals are great. Salesforce has better fundamentals than the sentiment suggests. So let me go to the hourly there because the daily there, you can see what sentiment is suggesting right now. But the latest quarter revenue grew 13% year over year. Subscription and support revenue grew 14%. GAAP EPS grew 52%. Non-GAAP EPS grew 50%. So revenue is definitely expanding and EPS is definitely expanding quite strongly. The market is still just skeptical because some software disruption fears and AI uncertainty are remaining. But fundamentally, CRM is not broken. And for me, this is a repair trade that needs the chart to keep confirming it. So let's look at that chart and see what's going on here. One thing I love, again, is these fib retracements. And I'm going to measure, this is an old fib from here down to here. I actually, a lot of times when I see springs, I want to see a pullback like this after all-time lows with RSI. And so we talked about this in a number of videos. And what that means essentially is we had RSI divergence on the daily from here to here. And when I see that, I'm going to use this as a low and see how far we bounce to see if it's a spring. And if we come back above the 23.6 on it, it's usually a really good sign to me that we didn't get acceptance down there. However, sometimes it does peek its little head back into that. And I want to see us actually reclaim up to the 38.2. And if we look at this on the weekly here, we can see what else we really do need to accomplish, which is get above that 20 simple moving average on the weekly because we're quite far below it. And that's really the first part where I'm going to say this is looking like other market participants are starting to engage in it. But that being said, we also did see bullish RSI divergence on the weekly from here at this point to here. We had some really strong RSI divergence, and I love that with expanding EPS and revenue growth. So I won't cover too much more of that CRM. We covered it a lot over the weekend, and there's some other videos on my channel if you want to search for it. A lot of them still hold because some of them were even made right around this. Yeah, this is the fabled Morningstar reversal candle right here. So if you want to learn more about that, I talk about it in RSI divergence video, which will probably have an ad for it at the end of the video. All right, so the last one I want to do is Pfizer. This is a little bit different because I haven't covered it too much on the channel except when I did a full portfolio review. And I wanted to cover it because it's one of those names that requires a long-term time horizon, and it's more of a position rather than a day trade or a swing trade. And people don't cover that on YouTube because it's not as sexy, but we've learned all of these great technical analysis skills, and it's great to apply it to things that can help you build some generational wealth here. And what happened in Pfizer is that we came down from these COVID lows. So it was at $61 and we came all the way down to $20. So let's look at the fundamentals and see what happened and try to build out a case here. And then I'll show you why technically I'm quite interested in it at the moment. So as I said, it's a different kind of setup. It's not a clean earnings expansion long yet. It's more of a beaten down healthcare dividend pipeline and turnaround trade. The latest quarter revenue grew 5% and the ex-COVID operational revenue grew 7%. So there is some underlying revenue improvement, but the reported diluted EPS fell 10% and adjusted diluted EPS fell 18%. So for me, Pfizer is interesting, but it needs to prove that the non-COVID portfolio pipeline and cost discipline can start turning it into a real EPS growth story. And I think that is possible because EPS growth has been down. And plus, everything has been compared to what they did during COVID. And now that that has gone away and we're not in a pandemic anymore, I don't think it's quite fair to judge it based on that. And I think the market has been getting it wrong. That's the variable perception I have about it. And now let's look at the charts to see why I started to look at this and when I started to look at it. So the first thing I noticed is on the weekly. And so I'm just going to point out two things here, which is that there are sometimes nested and sometimes recurring things that happen. Everybody likes to talk about the fractal nature, a small thing happening within another thing. Sometimes it's just nested and occurring there as opposed to the same pattern in a real fractal pattern. And so the first thing that I noticed on the weekly about a year ago was that we started to have, or maybe it was even a year and a half ago, I've had some of these long positions. I have 225 shares in this account, and I have some calls in other accounts, and I just sold a cash secured put on it today, actually, because we had a big drop and I've been wanting to get into it, which is why I'm doing this story. And we had bullish RSI divergence. If you look at from right here, when we first got oversold, or maybe even second oversold, in fact, these were pretty close, but if you come to this one, and come down to the actual lowest low. When the lowest low in the fifth, we're on the weekly now, and the weekly I have for 3 years. So the lowest low in the last 3 years was actually a result of RSI bullish divergence. I love it. And so I think that's right around where maybe I started getting in. In fact, you could tell what happened. I have a fib that's marked out from there. So I do remember that. And we've been holding up nicely. We came back, we retraced down to the 618. And from here to here, yeah, that's where our line is. Retraced it and we're holding that level. I think we could lose it and come back to the 786, shake out a few more people, but I am liking this right now. And what I want to show you is not just this RSI divergence, but we also saw it on the daily. And this is what I mean. It was kind of nested in the sense where it's not occurring over the same time span, but as of recently, we had from a few days ago till today an RSI bullish divergence. It's essentially from here, not this lowest low, but from here to here, price has now made a new low, and RSI from here, which was oversold, has now made a higher reading. So I really do like that. And I also think that the market is not, it's not pricing in what I talked about for post-COVID earnings and post-COVID fundamentals. And I also don't think it's starting to price in what AI could do to benefit this company. Well, that's the market recap for today. Huge thanks to everyone who subscribed, commented, and liked. It really means the world to me. And if you found this video helpful, please subscribe. I'd really appreciate it. And turn on notifications that you'll know every time I make a new video. And leave a comment. I get back to every single person, every comment I reply to. Let me know what tickers you want me to cover next and what type of analysis you'd like me to do on that. As you know, I cover macro setup, the options flow, the GEX, but I don't do it for every ticker because it would take a lot of time. But let me know what you'd like to see. Volume profile, trade architecture, all that stuff. I'll respond to those comments and I'll cover it in the next video. So thanks so much for watching. Happy investing and stay safe out there.